Hello everyone, good morning, and thank you for joining us today in this educational presentation where today I'd like to talk to you about secret rules that only pullback traders know. Now, pullback trading is specifically a different way of trading in which you like to buy at lower prices and sell at higher prices. And it's probably one of the most popular, if not most, I would say, successful ways to trade in terms of potential for capturing points in whatever market or time frame you're trading. Here's the only difficult part about it. Most people don't know when you're in a pullback as opposed to knowing when it's a trend change. And this is why traders have a very difficult time trading pullbacks. For example, as we look at this chart here, we see that, well, nothing much is happening, and then we get an event like this where the market starts to head pretty significantly lower. It's at this point that most traders would say to themselves, we're in a downtrend, and so you either want to sell if you had a position, or you don't want to buy this at all, or look to short it, maybe buy some puts. Now, here's the difference. Pullback traders, according to some specific requirements and rules, actually wouldn't look at this as a downtrend. It is more importantly a pullback, and a pullback means that this is an opportunity to buy. So using these specific rules, which I will be sharing with you today, you could have purchased the spiders, this is a chart of the spiders at this point, and captured a very nice upward move. Now, I know a lot of you are saying, well, you know, I've been trading for a while. I'm not someone who's used to following rules or maybe remembering all these things. Well, the beauty of this is that all these rules I'm going to be sharing with you are one click away on our platform, the PTS Primo charting platform. This is the educational platform that makes pullback trading simple because everything is pre-formatted. The rules I'm going to be sharing with you today are all just one click away. And even though we want you to understand the format and the basis for why these rules are being applied, it's just one click away and you'll be able to check your work with our platform. So welcome to today's educational presentation. My name is Stephen Primo. I am the president and founder of Specialist Trading. And our goal at Specialist Trading and with my sister site, Pro Trader Strategies, is simply to teach traders how to trade. You know, we never tell our students or our members around the world in over 115 countries and in every state in the United States, we never tell them what to buy. We never tell you what this new hot stock is, what this new hot market is you should be investing in. We'll never tell you what the perfect market or time frame is, or we'll never tell you what the perfect system is. You see, that's up to you. This is why most traders fail. It's because you rely too much on either some guy in a webinar or some $10,000 class you took telling you what to buy or sell. And that's why most traders fail. It's basically, you're telling the markets, I don't know what to do, so why don't you tell me what to do? Why don't you give me the signals on a nightly basis so all I have to do is blindly take them? Or why don't you have a trading room or a chat room where I just go to and find out what you're telling me what to do? This is the way most traders make their trading decisions, myself included when I first started trading. And this is, once again, is why most traders fail, in my opinion, because you're basically taking yourself out of the game. Think of any other profession, any other career, if someone did the same thing. I mean, you would think they're crazy, right? I mean, think of an airline pilot asking all of the passengers, how do you think I should land this? What do you think? Or a brain surgeon saying, how do you think I should operate? What do you think I should do? But traders do this on a daily basis. You watch TV, you wait for the earnings to come out, you go to a blog and read what this person says or thinks you should be doing. And this is really silly. And I know this once again from firsthand experience because when I first started trading, I did the same things and I didn't have anything to show for it. So it's my goal to get you out of that mindset and to make your own trading decisions. Now, the only way you can make your own trading decisions is if you're supplied with sound fundamental education that stood the test of time, that shows high levels of consistency. So this is what we do. We never tell our students what to buy or sell. We never tell you what the perfect market is. We never have you come to a chat room where you find out what we're doing. I mean, that's silly. We provide you with the information so that you can make those qualified decisions on your own. In my opinion, after trading for 43 years, the only consistent traders I've ever met are the ones that follow this process, not the ones that blindly follow what someone's saying on TV or what someone's saying, for that matter, in a webinar, okay? So you're going to see the attention to detail I give you today into teaching you these secret rules. But once again, before we start, we're required by law to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results today using these rules, but please remember that we can in no way guarantee that any of the rules I'm about to share with you will be repeated in the future. And also, please remember that all examples are strictly for educational purposes only. Now, while you're taking a moment to view the disclaimer, also, once again, if you haven't done so already, There's a lot of great free educational information I post on a daily basis, so feel free to follow us on Twitter. There's our handle right there, abbreviation for Specialist Trading. I post anything from signals our strategies have generated to little bits of financial wisdom. They're all there for educational purposes, to educate you to see what our process is. So lots of great free information. Once again, feel free to follow us on Twitter. Now remember, if you've attended this presentation thinking I'm going to tell you what to buy on Monday or what the market's going to do, or if we're topping out or if we're bottoming out, if we're starting a brand new bull market or brand new bear market, you've once again come to the wrong place. That's not what we do. In fact, that's entirely against our philosophy. Our goal is simply to teach you how to trade with the Specialist Edge. All right. This is the same way I was taught some 43 years ago. I started my career on the floor of the Pacific Stock Exchange, and my first year or two, I struggled tremendously, probably unlike how many of you are going through right now. I was lucky enough to have some mentors on the floor who were specialists themselves, who were a specialist is someone basically who made markets and stocks, and they taught me the things that I teach my students around the world. So hopefully these things I teach you will be able to sustain your trading as well, not just for a couple of months or a couple of years, but for a couple of decades, 20, 30, 40 years down the road. Now, since this is a class, please ask me as many questions as you'd like, but I don't want to stop at every slide to answer a question. It takes far too much time, and we'll be here far too long on your Saturday morning. So if you have a question, wait till the end of class. I promise I'll get to each and every one of them. The only question I will answer now is this being recorded? Yes, it is. So if you have to leave early or if you're having technical issues, don't worry. Each and every one of you will be sent a link to this recording, all right? Excuse me. Okay, with that said, let's begin and let's jump right into it. What I want to start off with sharing with you these buy signals that only pullback traders know. And these are the rules, and they may seem a little complicated, but I'm going to share them with you with a lot of slides, so you should be able to visually understand the process, all right? Okay, so these are buy entry rules. Rule number one, what you want to do is apply a 21-period Dodging channel indicator. Right, I've talked about this before. This is a very common indicator. It should be on your software platform. If you don't have it, ask your tech support to include it. If not, there should be some free places on the internet to find it. But what you want to do is apply this to any time frame, any market, whatever market you're trading. And what you want to see is that all three Dodging channels are headed in the same upward direction. Now you see, I didn't say headed in sync. They just have to be headed in the same direction, okay? So, for example, here's the chart we looked at the beginning. Obviously, most traders would say, well, Steve, this is a downtrend. I got to get out of this, right? I can't buy this. Why would I want to buy this stock? It's headed lower. But once you apply the 21-period Dodging channels, what you want to look for is, after you apply them, is the direction they're all headed in. And as you can see, they're all headed in the same upward fashion. Remember, they're not in sync. All right? For example, right here, we are going higher as well as on the bottom one. But look at here, I believe we went higher, but we're going sideways for a while. So the way to find out if all three are headed in the same direction, if you see this long extended period of sideways movement, is to see where the previous setting was. If the previous setting was lower, then that means you're still headed in an upward direction, even though you've been going sideways for a while, okay? So they're all headed in the same upward direction. So this tells you that the short-term trend is up. So forget about the last week or two of downward movement. This is just a sell-off or a pullback in a short-term uptrend. Okay, rule number two, after you've applied the Dodgings, you want to see a rising price bar now begin to sell off, okay? Because since all the Dodgings are headed higher in the same direction, usually you'll see price headed in that direction. But then when it gets to a certain point, it starts to sell off or decline. So what we want to do is wait for a bar that is entirely below, and as you can see here, underline these words here because it's very important, not touching the rising midline channel. This will be our setup bar. So let's look at an example of that. Once again, when you see these three rising channels here, price is usually headed higher, and many times it will touch or hug this top line, but then you start to see a sell-off. This is not a downtrend. This is not a change in trend. As long as these are headed higher, this is simply a pullback. So what you want to do is, as this comes lower, it gets closer to the rising midline. It intersects it. But now we have a bar that is entirely below, and it's not touching. And when we say touching, we're not saying it doesn't close above there. We mean that the top of the wick, the bottom, whatever direction you're looking at, is not touching. It's entirely below. Because once we identify that, this is our setup bar. Okay? So this brings us to rule number 3. We're going to enter long, not at the market. We're not going to place a lower limit, but we're only going to buy on the confirmation that price trades above the previous bar's high or that setup bar high. Okay? So what does this mean? Well, when we say confirmation, we don't just want to buy at the market, because what if you had bought and then the next day it went lower and then the next day it went lower? Okay? We want to confirm that this is going back up. So we have to wait for it to trade 1 or 2 ticks. It's up to you. Use your own discretion above the high of this setup bar. Okay? That's how we confirm that we're starting to go in our direction. Think of a train station, all right? And you want to head from point A to point B on a train. So you're waiting at the train station, and you're waiting for the train to take you to your destination. Now you see a train coming down the tracks, but it's headed in the exact opposite direction where you want to go. Are you going to jump on that train? Most likely no, right? Because it's not going where you want to go. It's going the wrong direction. But unfortunately, this is the way the majority of traders trade. If they see something come lower, they'll say, well, I want to pick a bottom, so I'm going to buy here. It's too oversold. It's hit some support, some Fibonacci support, all right? Or they'll do the opposite. They'll say, it's too high. I want to sell, okay, even though it's going the wrong direction. We don't trade that way. Our basic format is to wait for a confirmation. In other words, you're at the train station. If you see a train coming in the direction that you want to go, that's the one you jump on board. So we want to see that price is headed in the direction we want to go. And the only way we can confirm that is if it trades above this setup bar. Now, let's say we never traded there, and the next bar is lower. Now, if all the bars are still headed in the same upper direction, if all the requirements are still in place, well, then the setup bar will drop down to the lower bar, and you'll drop your entry point down to 1 or 2 ticks above that way. So this way you can track it as long as you see that the requirements are still in place. But once these Donchian channels started to head lower in a downward fashion, well, then the short-term trend would be changing to down, and so you wouldn't want to buy if you're in a downtrend. But since everything is still headed upwards, we're going to buy right here. And look what happened. The next day, we opened up a little bit, but you still would have entered right there. And then, guess what? You have a nice little profit, right? You see how simple this is? There's no complication at all. It's just that we overcomplicate our trading, thinking that, well, we're in a downtrend. Well, that chat room I went to says that I have to sell this stock and that it broke support where all the institutions were buying. Or, wow, the earnings are supposed to be really bad, so I'm not going to purchase it. You see how my decision process is based off of outside information. It's not based on the information we should be listening to, which is the market, the chart in front of us. So remember, make your decisions based off the market. And this one simple setup here tells you what the market wants to do. Not the earnings, not the jobless claims, not some guy in a chat room, not some guy in a webinar. The chart in front of you tells you everything you need to know. When I first learned this simple concept some 4 decades ago, I had a real difficult time grasping it because I thought, this is ridiculous. This goes against everything I was taught. I was always taught to look at the earnings. I was always taught to look at the, the economic figures and the numbers. Once I let that stuff go and I only focused on the chart in front of me, that's when my trading started to become consistent. So this is what I'm trying to teach you. Okay, let's look at sell signals. They're basically the same thing. We're just reversing the rules, turning them upside down. And remember, we have a good crowd here today. If you joined us a little bit later, remember, save your questions for the very end, okay? We're going to be waiting till the end. I won't answer any questions that are now because we have a lot of slides to share with you. Okay, rule number 1. Apply the 21-period Donchian channels again, but this time all 3 Donchian channels must be headed in the same downward direction. So as we see here, as we look at this generic chart, wow, some would say, well, Steve, I don't want to be selling this. Look at this. We're in an uptrend. And what do we have here? We have a nice bullish engulfing pattern, or maybe it's a morning star. And look at, we just keep going higher and higher. So, why would I even consider selling this? This is in a strong uptrend. And, the institutions are buying. That one brokerage house put out a buy recommendation. So I'm not going to buck the trend. You always say to trade with the trend, right? Well, here's the difference. Is this really an uptrend? Because once you apply the 21-period Donchian channels, what direction are they headed in? they're all headed in a downward direction. Now, unfortunately, this chart, we didn't go back far enough, but the last setting on the lower channel was at a higher point. So they're all headed in the same downward direction. And this is not in any way an uptrend. This is a short-term bounce in a short-term downtrend. So this is actually a selling opportunity. You see the beauty of this one tool, the 21 period Donji channels, how it really tells you what's happening on the short term. Okay, rule number 2. Now, the declining price bar now begins to rise. So in other words, while the trend is lower, all of a sudden we start to get a bounce. So we're going to wait for a bar that bounces and is entirely above and not touching the declining midline channel. This is going to be our setup bar. So as we look now, we see that, well, price likes to hug and touch this bottom line, but then we start to bounce. This is not a buying opportunity. The way most people would be sucked in and say, hey, Steve, I bought right here. I've got a couple of days profit. Because what do we have here? The Donjins are headed lower, and we have our first bar that is completely above and not touching. Do you see how it's not touching the middle line? This is our setup bar. So where most people would be saying, Steve, why would I sell? I've got a 2-day bounce here that where I bought from here, and for the last 2 days I'm making a nice profit. I'm even thinking about buying some more. Well, this is why most traders fail, because they go to that chat room or that guy on TV says to buy this stock, where when they're doing it, we're going to apply rule number 3. We're going to enter to go short or sell the position on the first confirmation of price trading below the previous bar's low. So in other words, here's our setup bar. We're not going to sell at the market because we know that the next day it may go higher. We want to wait for confirmation. We want to see the train headed in our direction, and the way it does that is by trading 1 or 2 ticks below right here, okay? Remember, that's a discretionary number. This is not a system where everyone has to trade the exact same way. I know a lot of you have been trained to think, well, Steve, what is it? 1 tick, 2 ticks, 1 point, half point? That's up to you. Remember, you're in charge of your trading. These are just basic formats and guidelines. We have other ways to apply this as well, where we add another indicator, where we add different ways, but I'm just sharing with you a basic way in which to enter here, okay? Now, so we wait for that, and once again, if we never traded there on the next bar and went up higher, let's say we went up like this, but we were still having the Donjins head lower, nothing started to go back up, well then we would just move this up. This would be our setup bar. As we can see, we didn't go higher. We would have entered on the very next bar, and look what happened, okay? Once again, where everyone thought there was the beginning of a nice uptrend, you were not listening to the earnings, not listening to the forecasters. You were listening to the only thing you should be listening to, the market. The market was telling you, I'm just bouncing in a short-term downtrend. This is more of a selling opportunity than it is a buying opportunity. And had you purchased somewhere right here thinking that this was an uptrend, well, you would have had to get out quickly because 2 or 3 days later, you're in the loss column, okay? Now, do you see how simple these rules are? These are the rules that pullback traders know. These are just a very simple, basic format. But guess what? They make up the basic format and the guidelines to one of our most consistent pullback methods. This is strategy number 1. Now, what I've shared with you right now are basically the entry rules, the preliminary entry rules. Now, strategy number 1 has another indicator it follows that also includes the overall trend. That's our buy-sell line. It also includes different ways to enter, different ways to exit, because right now I haven't talked about exiting. I'm sure a lot of you saw those examples I just gave you and said, wow, Steve, this is great, but where do I exit? Or where do I place my stop? Okay, well, those are all included in the course. But for now, I'm just sharing you these entry rules that are a very conservative way to trade. Once again, the strategy incorporates the buy-sell line, which is our 50-period moving average. It also incorporates different ways to enter, different ways to exit, different ways to place your stop. Remember, our job is to provide you with this information so that you can ultimately make your own decision. I know a lot of you are saying, well, Steve, why wouldn't you just tell me where to enter or where to exit? Because once again, firstly, I would be taking you out of the game, making you a robot the way all these other websites do. And basically all you have to do is enter your orders. And remember, everyone trades differently. In fact, our credo is that no 2 traders should ever trade alike. The entire business, the entire industry is based off of you trading alike. But our philosophy goes entirely against that. You shouldn't be trading like anyone else. You should be basically having a sound fundamental format the way we're sharing with you today. But then how you want to enter, how you want to place your stop, how you want to exit should be entirely up to you. Okay? One of you traders may be very conservative. You may say, gosh, Steve, I don't want to take a lot of risk on. Where another trader would say, listen, Steve, I have a large amount of cash. I don't care about risks and stuff. I can take a huge risk. So therefore, you'll each have different stop placements. Is one better than the other? No. You should be trading according to your own style, your own personality, your own risk parameters. That's how you become a consistent trader. What I've shared with you today are just the standard basic entry rules, okay? We cover a lot more in detail so that you can make your own decision in the actual course. But let's share with you some of the highlights. Once again, a pullback strategy such as strategy 1 is designed to buy low in uptrends and designed to sell high in downtrends. So this fits a lot of traders' needs. A lot of traders like to just buy at the market and they say, you know what, Steve, I don't care. If the stock starts to take off, I'm going to buy it. I don't care if I buy at the high. I feel confident enough because I know this is going higher. Well, that's fine. Those are called continuation traders, and they feel comfortable with that. A lot of traders don't like to trade that way. They like to know that they're buying at a low, inexpensive price. And if they're selling or buying puts, they like to sell at a high, expensive price. That way they get more bang for the buck. This is what pullback trading is, okay? Now, it does this by applying a unique dodging channel application. Now, we usually reserve that for members of the course, but today you learn what it is. It's 21-period dodging channel. The beauty of strategy 1 is that you can apply it to any market, any time frame, and any direction. But with all of our methods, even though you have the basic format for entry today, please paper trade first. Okay, the last time I gave this presentation, one of the students, emailed me later on and said, Steve, this is not working. And then when I got examples of the trades they had entered in, they were all faulty because they didn't follow the rules. They weren't entering at the using the confirmation. They were not waiting for price to go above the declining dodging channel. So they were doing all the faulty things, all the wrong things because they jumped in too quickly. So please paper trade first so you understand the process. Our edge here is consistency. Consistency means you will have losses. It doesn't mean that every trade's a winner. It means that you will have losses, but the strategy, the method, can usually recoup those losses very quickly. So that's what we mean by consistent. In fact, I'll show you a couple of examples right now. Okay, so let's look at some recent strategy number 1 examples, and you'll see just how consistent this method is. All right, let's start out with stocks. For all you stock traders, here's an example in WDC. As we can see, the dodgings are all headed higher in the same direction. This one, unfortunately, the chart doesn't go back, but it's coming from a lower setting. As price starts to decline, it gets closer to the middle line, and now we have a bar completely below and not touching. So that's our entry, 1 or 2 ticks above. It's up to you. Some students take a half point, some students take 1 tick. Now, the one important thing I want to mention is that here's another thing where most students jump in too quickly and they don't study. They say, well, Steve, I bought it on the next bar, but wow, it closed up at the very high and I bought at the close. Well, remember, you can do that if you want more confirmation, but the basic format does not call for it to close above there. Many times it will trade there and then close lower. That's still okay. So the basic format just needs it to trade there. Once it trades, you should buy. It doesn't have to close there if you don't want to. Now, in this example, it did close above. So had you bought at this point, you'd have a little profit. But later on, you had a 10-point gain coming into the end of April, right about the end of April. As we look at DVA, we see the dodgings are headed lower, as you can see. As price is hugging the bottom line, now it starts to bounce. As it bounces, it intersects. But now we have our first setup bar right here, okay? Because it's entirely above this declining middle line. So this is where we're going to sell. But did it trade there? No, it didn't. Now, the very next bar, it went even higher. So do we negate the setup? Well, once again, you can if you want to. It's up to you. But is it still a valid setup bar? Sure. We're still headed lower. These are all headed in a lower direction. None of them have gone back up. So it's still a valid setup bar. So the beauty is we can move our entry point up here. Now, on the very next day, the 1st of April, we did enter short. And the stock fell 12 points in the next 3 days. Not a bad little trade, right? I mean, you're just listening to the market. We're not listening to anything else. Let's look at CINF. Same process. I know we can't see where this bottom line was because I wanted to show you a close-up chart, but they're all headed lower direction. As we bounce, we intersect the midline, and now here's our first setup. We sell if we trade right here. Well, we didn't. We went up higher the next day. We sell if we trade here. We didn't. So as you can see, sometimes you'll be waiting 2, 3, maybe even 5 days. But as long as the rules are still in place, as long as the Donchins are still headed lower, as long as they didn't turn up and go up, you can still apply this if you decide to do so. Remember, it's up to you. You're in charge of your decision, not us. So a lot of students will say, Steve, I'll wait 1 or 2, but if it doesn't fill after 2 setup bars, I'm out, because I kind of get, off my paper trading, a lot of times they won't work after that. Okay, well, that's fine. It's up to you. Where other traders would say, Steve, I don't care. I think they do work. So remember, this is not a system. Nothing is back-tested or researched because everyone trades different. We encourage you all to enter at different places, to place your stop at different places, to take whatever exit you want. We have upwards of 7 different exit points. So how can you get statistics when everyone, our thousands of students, are trading this an entirely different way? Okay? So just follow the basic format and paper trade to see what makes you feel comfortable. Now, had you decided to stay in this, well, you would have finally gotten short here. And that would have been a good decision because 22 points later, you could have had a potentially captured a nice profit. Okay, let's look at ZM. Okay, here's a perfect example of sometimes how this particular way of entering, which is a more conservative way, doesn't work out. As we can see, all the Donchins are headed higher. They're all headed in the same upward direction. They're not in sync because, as you can see, the top line is going sideways while this one is headed higher and this one is headed higher. But as long as the last setting is lower, they're still going up. Now, as price declined, it touched and intersected this, but we never had a bar that was completely below. Sure, we closed, open to close. But remember, we want to see a bar that is not even touching. Now, unfortunately, we missed this nice move here, okay? But that's okay. The bars, the Donchin channels are still headed higher. We're hugging the top line, and now we start to sell off. Now we're intersecting. Here's our first setup bar. Here's our second. And on the third setup bar, you could have entered and gone long Zoom, okay? This was in the first week of April. Prior to any news about how well this company is doing during the pandemic and the quarantine phase, there's no reason you even had to follow that. And there's no reason you even had to know what this company does, for that matter, if you don't want to. All you had to know was that this is a setup to buy ZM, regardless of what the company does. And the stock went up 60 points coming into May, okay? To see why you don't need to follow news if you don't want to. I stopped looking at news 40 years ago. There's no reason for me to look at news for my trading. Now, if you want to, you can. Remember, we're not here to tell you how not to trade. We're only sharing with you things that you need to trade, in our opinion, that has stood the test of time. And unfortunately, news is not one of them. Neither are earnings, neither are economic reports, neither are support and resistance lines, neither are volume. And where someone could say, well, Steve, that's terrible. I mean, you need those things. But traders who have finally grasped this concept say, gosh, why was I wasting my time for all these years focusing on those things? Because if they work so well, then why wasn't I getting the results I wanted? It's because they really don't work that well in terms of consistency. Every once in a while, earnings or support resistance or, all these moving averages, crossovers, every once in a while they will generate a nice setup. But over time, you really are not going to have a lot to show for them. You want consistent things like this. How about Apple? All right, here's an older chart of Apple in March. All right, remember when March we had that tremendous sell-off? A lot of traders love to play the victim game and say, gosh, I wish I would have, been tipped off to go short, but, how did you know it was going to go down like that? Well, the beginning of March, we have the Donchin channels headed lower. We have price hugging the lower one, and now it bounces and intersects. And here's our first bar on March 4th, completely above the declining middle line, okay? The first week of March, you could have gone short and potentially captured 80 points. So never let, not even yourself, tell you that there aren't opportunities around. There are always opportunities around. Unfortunately, we're not listening to the correct things. We're listening to a chat room. We're listening to some guys on TV. We're listening to the economic reports. But right here in front of you, the market, the only thing you should be listening to, was telling you to sell Apple. We look at OI. Now, this is, a lot of traders say, well, Steve, you always show these expensive stocks. Does this stuff work on the inexpensive stocks? I don't have a large account size, but can I try this on an inexpensive equity? Sure. Here is a $5, $6 stock, OI. The same process happens. The Donchins are headed higher. So as price hugs the top one, now it starts to sell off. It intersects, and here's our first setup. Here's our second setup bar, and now you could have gone long here. This was on the 22nd of April, and you would have made a couple of points in a week. Doesn't sound like a lot, but that means the stock gained 30% in 1 week. So you could have had multiple shares if you wanted to. And so 30% for a stock to gain 30% in 1 week, that's a huge amount. Imagine Apple, imagine Tesla gaining 30% in 1 week. Now we can also apply this to expensive stocks. Here's a $300 stock, or RLY. Same process occurs. We are looking at the Donchins. They're all headed lower. Price will hug the bottom line, and then it starts to rise. Here's our setup. We could have gone short the very next bar. This was in March, the middle of March. Potentially captured 130 points to the downside in the next 2 weeks. Now remember, some of our students will use one of our exits and say, well, I took a quick 5 or 10 points and I got out. That's great. Someone else would say, no, I stayed in a little longer. I used another exit level. I got 25 points. Great. Where still another trader will say, you know what, Steve, I'm still short. I never covered, and I've got 130 points right now. That's great too. Is one better than the other? No. You see, you have to make your own decision and trade according to your own means. If you feel comfortable getting in and out quickly, then that's the way you should trade. If you feel comfortable staying in and getting as much bang for your buck, then that's the way you should trade. But you should never go to a chat room or a trading room or blindly listen to someone tell you where to enter, where to exit. That's your decision based off of the information we provide for you, okay? Here's an example of REGM. All right, once again, coming into April, the same process. Here's our first setup. Our second setup, you would have entered lower right here. And once again, coming into the end of April, 120 points potentially you could have captured to the upside. Last couple examples, BIDU. This was in February, well before the market fell out of bed. Another sell signal. All Donchins are headed lower. This chart, because we wanted to minimize it, doesn't show, but it's coming from a lower point. Price starts to touch and rally. And now here's our first setup bar. You could have gone short on the very next one. This was in the second week of February, potentially capturing 50 points coming into March. And NVDA, okay, here's a buy setup in January, all right? Well, the market was getting ready to fall out of bed. Here was a buy signal in January, the same process. It's easy to see that all Donchins are headed higher. Price is hugging the top Donchin. Now it sells off on the very next bar where most students would say, well, gosh, Steve, I entered here, but this is a bad buy here because look at, I entered, and then if I had a tight stop, I most likely was stopped out. Well, that's true. If you used one of our very tight, low-risk stops, most likely you would have had a loss there, okay? But guess what? Look what happened the next week. Another buy signal was generated. You could have used that one to enter, and you would have made back your small loss that you had on the very first signal. So this is what we mean by consistency, that it is an awareness. You will have losses from time to time, but you want a strategy that's able to recoup those losses. And then lastly, let's look at Amgen right here. Here's a downward progression. Price rallies. We have our setup bar, 36 points coming into March, okay? Now let's look at ETFs. Now, a lot of our students like to apply this to ETFs like the QQQs, the spiders, gold index, whatever, just to get an idea of what that sector is doing, and then maybe they'll purchase a stock or an option in sync with that. They don't actually have to trade the ETF. For example, here's gold, okay? Now, gold gave a great buy signal in the first week of February. As you can see here, gold, that's the ETF GLD, could have potentially captured 12 points. Now, if there's a buy signal in the ETF that represents gold, you could have purchased a gold stock that you were interested in. Or maybe you already had that position, you were long. This would have gave you the confidence to pull the trigger and buy more shares. You see, there's multiple ways to apply this. You don't actually have to buy the ETF. Remember when the public was just screaming about, and they still are, about how oil is just falling out of bed? And boy, I mean, this came out of nowhere. How did we know that oil was just going to go down to nothing? Well, let's look at a chart here in February. This is U.S. oil. This is the ETF that represents an oil fund. As you can see, a perfect example of going short oil right here as all three Donchins are headed lower. Price is hugging the bottom line and then starts to rally. Here's our first bar completely above the declining middle line. Do you think oil was giving you a sign that it wanted to go lower? You see, traders love to play the victim game. Like, boy, how did you know oil was going to go? Well, no one knows oil is going to go down to the level. We're not saying we can predict that, but we can tell you what the market is saying. And the market was saying it wanted to go lower. So why would you even think of buying oil or trying to pick a bottom? If you've been trying to pick a bottom in oil, you've been losing a lot of money. But if you use this simple technique, you could have had a really nice trade here, because potentially you could have captured up to 70 points. This was a chart coming into the first week of May. And remember when the market was headed straight up before the big pandemic crisis? Well, look at the spiders, all right? Look at all the buy signals you had here, 2 or 3 buy signals. Now, maybe this one right here you would have taken and maybe got stopped out, but look at the very next one. You could have made that all back. Had you taken this first one and hung on there, well, that's potentially 30 points you could have captured going into mid-February, okay? Now, 30 points may not seem a lot, but that represented 2,000 Dow Jones industrial points. So once again, didn't mean you have to buy the spiders. You could have used this as a market directional tool to tell you that the market was still going higher. Now let's look at the forex markets for all you forex traders. Here's an older chart in the Australian dollar. This was in January, a perfect sell setup. Look at these Donchians, all headed lower. Price is hugging the bottom one and then starts to bounce. Here's our first 4-hour bar, completely above, not touching. If you sold in the very next 4-hour bar, potentially captured 185 pips. That's close to $1,900 per unit that potentially you could have captured if you stayed in long enough. Now, that was a 4-hour chart of the Australian dollar. What about a weekly chart of the British pound, New Zealand dollar? Okay, the same process is applied. It doesn't matter because we're looking at a different market or a different time frame. Here's a weekly chart. All Donchians are headed higher. Price is touching the top one and it starts to sell off. It kind of oscillates above and below, but now we have our setup bar right here, not touching. You could have entered in January, and in the next month or two, 900 pips. That's roughly about $9,000 per unit if you held it for a month or so, okay? So that's currency pair trading. How about E-mini futures, all right? Intraday traders. Here's a 10-minute chart of the E-mini futures. All the Donchians are headed higher. As we see price decline, here's our first setup. And on this chart, look at this. In the next hour, that was 90 points you could have potentially captured in about an hour, okay? That's roughly about $4,500 per contract. Now, that's a 10-minute chart. If we go out to an hourly chart, you could have potentially captured 250 points on these 3 setups here, okay? So you see, I've showed you so many markets and so many time frames. Let's look at one last market. Let's look at commodities, because a lot of traders like to actually apply this with commodities because they trend very well. Here's a weekly chart of coffee going back to last year in October. Here's our setup. We didn't get long. Here's our next setup. You could have gone long in October. Coming into this year, 45 points represent thousands of dollars in coffee. Or what about cocoa? Here's a daily chart of cocoa. All the Donchians are headed lower. Price hugs the bottom, starts to touch and intersect the midline. Here's our first setup bar completely above. Here's our second. You could have gotten short here for 165 points to the downside. So you see, it makes no difference what market or time frame. Not at all. This method can be applied to any market, any time frame, and any direction. So let's recap. Strategy number 1 is one of our most consistent pullback methods. It trades stocks, E-mini futures, forex. It also trades commodities as well, even Bitcoin. All right. You must apply the 21 period Donchian channel though. Why? Because I've experimented since I've been trading this for decades. I've experimented with other indicators such as not Elliott Wave, such as Bollinger Bands, such as Keltner channels, and they just don't generate the same results. So if you're thinking about saying, well, gosh, I don't have access to Donchian channels, Steve, I'll just use another tool that kind of is similar to that, you're not going to get the same results, okay? This can be applied to any market, time frame, or direction, but please, as we said earlier, paper trade first so that you don't make needless mistakes, all right? Our edge here is consistency. I showed you a couple of examples where you would have had losses, but on the very next setup, it would have generated a profit that could have potentially made back those losses. That's what we want, because consistent methods will sustain you. You see, most traders are looking for that home run method where you make a ton of money, and sometimes they do very quickly, but usually they give it all back. That's not what will sustain you. Remember, success is longevity. Success is not a couple of good trades and then you give it all back. Success is a 2-step forward, 1-step back approach. That's what will sustain you to go on for trading for 30, 40, 50 years if you want. And that's what we try and instill in all of our strategies and methods. So ask yourself, do you think this strategy number 1, can help your trading for the remainder of 2020? If you say yes to this, which I believe most of you will, we have a great discount offer for all of you attending today. We're going to offer you strategy number 1. This comes with all the complete course rules, all the entry rules, all the exits, all the stops. We have a conservative as well as aggressive version. Now remember, there are different ways to trade this. I just showed you a very minor one. We also apply the buy-sell line with our standard course rules. That's another indicator. So there's lots of great ways to trade this. This is all included in the course. Now the strategy number 1 course usually runs for $695, close to $700. We're going to discount that tremendously today. But we're also going to throw in another strategy course. That's strategy 3A. Now, I've talked about this in other Saturday mornings. If you're not familiar with it, it is based entirely off completely different rules. We're not looking to buy low or sell high with strategy 3A. We're looking for markets that have taken off. And a lot of times traders don't know whether they should buy or sell because they figure, I'm going to be buying up too high. What if I buy at the top? Or what if I sell at the very bottom? What if I buy the puts and it just stops going down? Strategy 3A is designed as a continuation method. In other words, it's looking for more continuation in a runaway market. It's based off of a unique Bollinger Band setting. So this is an entirely different method. So you get the best of both worlds. You can buy low and sell high using a pullback method. But for those markets that just take off and they don't give you a chance to pull back, strategy 3A is a great another tool to have in your pocket. For example, as we see here in TRIP, this stock was basically going nowhere, then took off. Where most people would say, well, I don't feel comfortable buying here. I should wait for it to pull back. A lot of times they won't pull back. So strategy 3A generated a buy signal here, and look what happened. You see, it's designed to see if there's more momentum left, more move left in the current trading direction. Same thing on the downside. All right, when all of a sudden was looking as if it was going lower, a lot of traders would say, well, I can't buy the puts now, or I can't sell it now. It's down too low. I'll wait for a little bounce and then I'll sell. Strategy 3A is designed to see that it's going to continue in that direction. It's a continuation method. And as you can see, this would be the method you want that really complements strategy 1. So we're going to throw in this course as well, all the rules, the proprietary Bollinger Band settings, and this usually runs close for $700 as well. We're going to discount that included with today's offer. But we're still not stopping. We have more extra bonuses. In fact, we have 7 more bonuses we're going to include. All right, we're going to give you the add-ons. That's the up and down arrows for these strategies. Not that blindly tell you where to buy or sell, because we teach you in the course what to look for. But this is a way to check your work. We want you to identify these setups, and then to check your work, click on the arrows to see if you're right or not. All right, that's all included as well. That's a near $1,900 value. You're also going to get bonus number 2, our Secrets of a Stock Specialist course. This is a 3-hour video seminar of a recording that was made of me speaking in Denver, Colorado some years ago. Lots of more great free education. This is a near $1,000 value. You're going to get that included. You'll also get a PDF version of my book. All right, this is a $100 value. This is where I go into detail, where I talk about my own personal trading when I was on the floor, trading during the crash of 1987. It's a great, great book. Tells you about how we used to trade some 40 years ago, and that's included as well. Now, I'm going to skip bonus number 4 for right now and move on to bonus number 5. This is Secrets 2.0 course, where we take all the education up to a different level, more advanced information. All right. Bonuses number 6 and 7 have to do with scanning ability. Okay. You're going to be able to scan for individual strategy setups or multiple setups. This is all great free information, but I think the best bonus we're going to give you here is bonus number 4, because even though we're discounting the prices of all of these, we're going to throw in 6 months of our PTS Primo charting platform access. Okay. This is worth its weight in gold, because you get so much information that I've accumulated in 4 decades, and it's right there at your fingertips. For example, let me show you what's included. Obviously, you'll get one-click access to strategy 1 and 3A. In other words, all you have to do is click on to see where those up and down arrows are. It's right there. It takes a matter of moments. But you'll also get the enhanced buy-sell line. This is our overall trend tool. You'll also get our auto-generated exits. So you'll know exactly, using one of our techniques with a click of the mouse, where these exit levels are, okay? But I think the most important thing you get here is our strategy signal scanner. All right, I developed this with Pro Trader Strategies to be simple and to be easy and to be able to scan on a nightly basis in a matter of moments. For example, once you click on our scanner, you'll see a series of green and red horizontal bars, okay? The green ones simply mean there's a buy signal. The red ones means there's a sell signal. So that's how easy it is. This process usually takes less than a minute or so each night. And we provide you with the different symbol lists, anywhere from stocks, futures, currency pairs, Bitcoin, European exchanges, Asian exchanges. We have just about all of that data for everything you need. Now, let's say I had given this webinar a week or two ago, okay, and you decided to become a course member and you scanned. Well, just this week on Monday night, you would have seen that there was a buy signal in GDS, okay? Fits all the parameters. As you can see, all the Donchins are headed higher. We're touching and hugging the top line. Now we start to sell off. We intersect, and now, well, guess what? It's a valid buy signal. Now remember, we teach you what to look for. We don't just want you blindly following to buy things because there's a green arrow there. We know you want to know what the requirements are and if they're met or not. And obviously, they've all been met. So you could have purchased this either that night if you use a more aggressive way of entering, or on the opening of the next day, because the stock gained 10 points in the following 4 days. Okay, now this just happened this last week. This is a updated chart coming into Friday. So in 4 days you could have gained 10 points. That would have been a nice little trade there. Let's say you purchased the stock, or maybe had calls on it. This happened this last week. So I know a lot of webinars, they show you examples of things that happen and they look great and they're like 2 years old, right? This is happening all the time with strategy number 1. So along with all of this, you get personalized tech support. If there's ever any problem, you can't load a chart or figure out how to use something, our tech support will be there in a matter of moments to answer and really to resolve any issue you may have. So let's break this down. This is our Saturday morning discount. Okay, you're going to get strategy 1, which we went over the preliminary rules today. You're also going to get continuation pullback, or I should say continuation strategy 3A, an entirely different method. You get all the rules, all the entries, exits, and stops. Included with this, you'll get 6 months of our platform, where everything is one click away. So you can apply this to any market, any time frame, any direction. This comes with the scanner. Okay, now usually, if you had all these 3 things, you purchase them separately, it would cost you close to $7,300. Okay, we are in no way going to offer this and make you pay that. We're going to discount this tremendously, just for a limited time only, though, for $297. That's a near $7,000 savings. But you must do this quickly. Don't sit on this, because I believe by next week we will be advertising an entirely different package, and you will have missed this, and it'll go back to nearly $7,000 again. Now, one thing I didn't talk about, if you see the last button right here, is educational correspondence. Also, with all of my strategies and methods, you'll get my personal email address. You can contact me whenever you like, even on the weekend. I have emails I'm going to be answering right after this presentation from our students who've sent me emails this morning. And you can ask me any question you like concerning the strategies, concerning the platform, concerning anything that you feel may enhance your trading abilities. So you also get that. You're going to be taught by someone who's been using these and continues to use these for the last 4 decades. So this is a great, great offer. For less than $300, you're getting close to 4 decades of information right at your fingertips. So this is why we say a year from today, you will have wished you became a member of these courses. Don't waste another year trying to elevate your education and elevate your consistency in the markets. Invest in yourself. Take advantage of this low, low price. I can almost guarantee you that most of you have lost close to $300 in the last month just using a faulty method, okay? Why not invest less than $300 and have all this at your fingertips? So here's how to take advantage of this. Contact Pro Trader Strategies. I designed and developed the courses with them. They're in charge of all the tech support and all the discounts. You can either email them, or I would suggest calling them up directly. They have manned trading consultants manning the phones right now. I can call them at 310-598-6677. There's absolutely no obligation. They're not going to try and sell you anything if you don't want. They'll give you information about pricing. They'll give you information about tech support or the platform. And that's what I would do if you have any ideas or any questions concerning pricing or discounts. Now, that link you see at the very bottom is the link that will take you to the sign-up page online. You have to copy and paste that onto a browser. But if you don't want to do that, you can just go to the chat box on the GoToWebinar column on the far right. In the chat box, they have posted a link to this offer. So you can click that on and it's live, okay? Now remember, I said I would reserve the end of today's presentation for questions. So if you have any questions, just open up your question and answer box on the GoToWebinar column and type in a question. And I promise I'll answer it to the best of my ability, okay? So I'm going to open that up right now. And see, someone is asking, if the Donchian channel in 4 hours shows a downward trend, but shows an uptrend in another 1 day, is this trade still valid? Well, I believe what this person is asking about is looking at different time frames. So in other words, I think, if I'm correct, if you're saying that on a daily chart, the trend is showing something different from like a 4-hour chart, right? Now, here's what I always tell my students. This is not something I don't want to, I'm not trying to be arrogant or condescending. I'm just trying to show you from my experience that I have personally found no consistency in using that technique. I know a lot of you have been trained and taught that that's the way you find the trend. You wait for the lower time frame to be in sync with the higher time frame. And you can do that, and that will give you a higher level of consistency. Well, from my own personal experience using that, because I was trained and taught the same thing some 4 decades ago, it doesn't work. I mean, there's no consistency in that. And in my opinion, the only thing it has done is keep me out of good trades, because while I've waited for the 2 time frames to line up, the trade had already triggered and unfolded, and I missed it. So personally, I don't use that. I only look, here's what I teach my students. Only trade the time frame that the signal is generated on. So if there's a signal being generated on a 4-hour chart, that's all I'm looking at. I'm not concerned with the daily chart. I'm not concerned with the weekly chart. Now, having said that, if you really truly feel you must and you don't want to let go of that technique, well, go ahead and use it. But if you're asking for my opinion, I don't use that. I don't teach that. I only trade the time frame that the signal is being generated on, okay? So if you're looking at a 4-hour chart, that's the only chart I'm looking at. I don't care what's going on in the weekly. I don't care what's going on in the 10-minute. I just look at the 4-hour chart, okay? Let's see. Is there a money-back guarantee on this offer? No, there isn't, because basically you're being given the entire rules. In other words, when we first started our company over 10 years ago with Pro Trader Strategies, we used to have a money-back guarantee. And then we found out that what a lot of the people were doing, unfortunately, they were getting all the rules, copying them all down, making videos of all our courses and everything, and copying all the rules. And then they would say, I want a money-back guarantee. I didn't get any from this. We give them back the money. And then they would sell it or share it with other traders. See, the thing is, we're giving you all the rules. This is not, if this were a system where we just generated up and down arrows, well, sure, we could say you can have all the money back because you didn't learn anything the way some other websites do. All you did was blindly take these up and down arrows signals. But we're teaching you what to look for. Remember, we are an educational company. So we're providing you with education. Now, since think of it as a restaurant. Let's say you go into a restaurant, when we can go into restaurants in the past, and you go into a restaurant and you have a meal and you eat the entire meal, you drink the wine, you have the entire dessert, and then afterwards you say, you know what, I didn't like it, I want my money back. Well, we can't get the meal back. You've already ingested it, okay? It's the same way with this. You've already taken in all of the education and you can sell it or share it with 20 of your other friends. So what we can say is that we won't give you a money back guarantee, but we will, if you're not satisfied, we will exchange it for another course, a comparable course. We have upwards of 10 different strategies. We have numerous methods and techniques on our platform. So if you're not happy, Pro Trader Strategies is very flexible. They will look for something to exchange it with, okay? This question is more for intraday, okay? How to use the signals. Well, remember, that's a good question. I use this method intraday. I would say that it works just as well. You'll get a lot more signals, but remember, nothing changes because you are using a different time frame or trading it intraday. Now, the only thing I will say, excuse me, this is the only thing that is a little bit different from this, is that because of intraday trading, sometimes you get a lot more noise, back and forth movement. I'm sure you experienced that before, where the market goes straight up, straight down, straight up, and that's where you get whipsawed a lot, okay? So for that, we have some slight minor adjustments you may want to do, but that's with any method, okay? It doesn't matter if it's strategy number 1 or something that's from another website. The smaller time frame you go, you will get more and more of that whipsaw back and forth movement. So that's why I would say just be careful not to trade it in too small of a time frame, probably no less than a 10-minute time frame. Okay, 5-minute, okay, but then once you get smaller than that, there's a lot of disadvantages with that up and down market. But you can still trade it. I mean, if you're trading a 15-minute time frame, you'll get some really nice signals. Okay. Excuse me. This is one of the fairest prices of trading out of the entire expo. Well, sure, yes, it is a great price. I mean, $297. I could see if you were questioning this price and saying, "Wow, okay, well, you're asking me to spend $2,000 the way some other websites do, and I just want to know if I get a money-back guarantee because that's a lot of money to put up." Well, we wouldn't want to do that to you. This is only $297. It's not even $300. And like I said, most of you, most likely, if you're struggling with your trading, lost more than that last month alone. So what if you had taken those losses and just said, you know what, I'm going to invest in myself and learn and use these methods and techniques and use the platform to educate myself so I can make my own trading decisions. I think that is worth a lot more than $300. So that's why we're trying to give you such a great offer here with a discounted price. Someone's asking, will we get a replay of this? Yes, you're all going to be getting sent a link to this recording. This is being recorded now. So everyone attending today will get a link to this. But please remember, a lot of our students have done this in the past. They've said, you know what, Steve, I didn't have time. I got too busy. And then I watched the recording for a couple of weeks. And after a couple of weeks, a month, I said, you know what, I'm ready to take that offer. Well, if you wait a couple of weeks, most likely this is going back to $7,000. So I would say watch this over the weekend. And if you're really serious about taking advantage of this, contact Pro Trader Strategies as soon as possible. Now, if it's not your cup of tea, then we totally understand. But don't sit the way so many of the students have and said, well, Steve, I'm ready to do this for the $297. And our trading consultants say, well, it's close to $7,000 now. We can't really throw in this offer anymore. We're already promoting another offer. So if this makes sense to you, if it fits in with the type of trader you are, if you're a pullback trader and this makes sense, don't sit on it. Make a decision quickly if you can, okay? People saying, how many days would you scan to find the setup? Well, obviously, you're going to need roughly 21 days for the 21-period Dodging channel. So that's basically it. But our scans look back about, I believe, about 75 days. It's automatically pre-formatted. So you don't have to look back and plug in, okay, I want to look back so many days. It's already pre-formatted for you. That's the beauty of it. We made everything extremely simple. I personally have a pet peeve with scans. If you've traded any platform out there, trust me, I've been around 4 decades now, going on 5. I've traded just about every platform out there. I know the good ones and the bad ones. And I'm not saying this because I'm biased. I'm saying this because I have the experience of trading all these platforms. I developed our platform to, fill in the gaps and the holes that these other ones have. So we specifically wanted to make it simple where the other ones are more difficult. I won't mention any names, but I've traded recently platforms where I'll go back and it's taken me over an hour to pull up a scan. That's how difficult it is. It's just silly. Where once I did that, when I developed this with Pro Trader Strategies, I said, listen, I want these scans to be simple. I do not want them to be difficult in any way. I want a trader to come home if they're working or if they don't have the time to do it intraday, they can just simply click in what market they're interested in, click scan, and they'll see the results in less than a minute or two. And we developed it that way. So that's why we make it as simple as possible. Everything is pre-formatted. The dodging channels, you don't have to open up, let's say you're trading TradeStation. Well, you don't have to open up the indicator box. You don't have to scroll through hundreds of indicators. You don't have to find yours, click in the parameters. After that, you may have missed the trade. With the PTS Primo platform, all you do is click on strategy number 1 and it's all there. It automatically appears on the screen. It takes less than a couple of seconds. So we made it this way to make it simple. And guess what? You're getting all this for less than $300. So I can't think of a better way to take your trading to the next level, okay? So remember, what I shared with you today is just the standard way of looking at the entries. In our course, we have different ways to use it. And for your own education, we make it more conservative by applying our buy-sell line, okay? We also make it more aggressive by using other ways to enter. We also have conservative stops. We have aggressive stops. We have conservative exits. We have exits that will keep you in as long as possible. It's all there for you. Think of a buffet line. I'll take the metaphor of a restaurant again. Think of a buffet line, okay? When you are going to a restaurant, excuse me, let's say, you go to a buffet, or when we used to have buffets, okay? Not everyone is going to pick the same choices. Everyone picks different things, but you're still picking your meal, okay? Because you have different, taste. You have different styles. Someone may say, okay, I want to just get a salad in this buffet, and I'll get a small soup plate to go with that. Someone else would say, well, you know what? I'm going to take the steak on the buffet, and I'm going to take some fish. Still, someone else would say, you know what? I just want the desserts. I love the desserts. I'm just going to eat all the desserts I can. All right? Is one better than the other? No, because you're picking what you like, what makes you feel comfortable. That's what will make you feel that you had a good meal. That's the way trading should be. It should be a buffet. You should have all the information in front of you and then have someone work with you so you can decide what makes you feel comfortable. And then once you do that, that's how you become consistent. You will not, in my opinion, ever become a consistent trader, someone able to trade 20, 30, 40 years down the road, if you blindly follow what some guy is telling you to do on TV or in a chat room, or if you blindly wait for the earnings. All right, we all saw the economic numbers yesterday, right? Terrible numbers about employment, the worst numbers ever. What did the market do? Went up, right? I mean, why would you rely on using economic tools when they're too subjective? If you look at it logically, that was terrible news. The market should have gone straight down. But we don't look at that. That's why I never teach students those things. If the market wants to go up, it goes up. It doesn't care about news. If the market wants to go down, I've seen it go straight down in the face of good news. So it doesn't matter. Don't waste your time using and making your decisions based on outside forces because there's no consistency in them. Base your decisions off of the chart in front of you and you will welcome consistency into your trading, okay? With that said, I just want to take one last look at our disclaimer. As we leave here today, I really hope that you learned something. We always try to teach you something, even if you don't decide to become a student of mine. We always try to teach you something in our webinars so you can go with a little bit of education. That shows you our devotion to trying to teach you and our sincerity, and that we're not just some type of a vendor trying to make money. We really want to educate you as traders so you can go to the next level, okay? Now, as we close, I just want to thank you for taking time out of your Saturday morning. I really wish you the best of luck in trading, but most especially, I look forward to you all taking advantage of this great offer and becoming students of mine in the Strategy Number 1 course. Thanks so much. Have a great weekend, and I'll see you next time. Bye-bye.